All right, welcome back. You're still watching Markets Today right here on Metropole TV with yours truly, Nina Shaban. And inside with me is Mr. Johnson Nderi, the manager in corporate finance and advisory from ABC Capital. A very good afternoon.
Good afternoon.
All right, just to get right into it, Johnson, I'd like us to start off with by looking at into the KCB and NBK merger.
Right.
What benefits are we set to see from both companies?
Well, I think being a business program, I think let's stick with the shareholders because there are a whole lot of benefits.
There you go.
Yes.
All right.
Right. So the shareholders, I think NBK shareholders will most likely be the biggest benefactors, in my opinion, and that's because their assets are being bought at net asset value or close to it, relatively speaking, and in exchange. Their assets are moving to, in my opinion, a much better management team. So they are most likely going to see, I mean, as opposed to staying where they were and watch the value of their assets depreciate, they're going to, you know, benefit from KCB's management, right? And those shareholders includes workers. I mean, actually the majority shareholders, NSSF, which are worker assets. Now, from KCB, of course, this is new assets they're bringing onto the table. Yes, they're getting them, in my opinion, slightly expensive. However, they're not too expensive in the sense that they're getting them at net asset value. Now, it's just their job of their management, to boost the performance of these new assets, and which obviously we expect they'll be able to do, maybe not necessarily in 1 year, but maybe in 2 years. And we expect them to deliver, and of course the valuations will show up in KCB shareholders' share prices.
All right. You said something that, of course, I'm going to ask. You just mentioned that, according to your opinion, you feel like KCB is getting a slightly expensive deal.
Yes.
Yes. Kindly clarify that.
If for example, White, another bank, you know, one that is more commercially oriented, they will argue for a lower price, I think, right? If only because if you look at the assets, you know, I don't think management of KCB is privy to what's going on behind the scenes in NBK. All they can see is the books but they don't know what's behind there. Now, because of that, most buyers will have put a discount, right, and provisions of clawback, just in case. And it doesn't seem like this transaction has those features, and therefore, in my opinion, NBK got a sweet deal.
NBK got a sweet deal, and maybe probably that's why they jumped right into it. Now, just to bring our viewers up to speed, let's take a look at the different assets that KCB and NBK have. KCB has about 369 ATMs, while as NBK has 140. The agents that KCB holds, or rather has, is 8,600, and as NBK has about maybe just slightly more than 510. The branches, different branches of the commercial bank of KCB they have 200 different branches as compared to 70 of NBK, which is across the country. Now the staff, KCB staff are 5,000 and 5,058 of them, as NBK's are 1,499. Now, I wanted to start with the staff, yeah?
Right.
The CMA gave them, gave both KCB and NBK, CMA gave the merger a go-ahead. Right. But the one thing that CMA was strict on was that they give the workers, both the companies retain their workers for the next 12 months. Right. Do you think, was it a fair deal, or did the workers, because 12 months is just 1 year? Do you think that was a fair deal for the employees?
Well, now they have the opportunity to prove to the new management that they can deliver under the new terms, new deals, under the new entity. But now that they are being supported by probably a more able, in my opinion, a more able management team, so that's a good opportunity. I mean, that's what they would ask for if there were anybody, you know. That's all they could have asked for. Otherwise, I think that's a fair transfer.
Reality after 12 months, what do you see happening?
Well, they will. You see, none of the new none of the workers in NBK are new to banking. And they're going to be working with KCB. And there will be some overlaps, and all teams, all individuals will have an opportunity to perform, given the resources that they have. And that being the case, then I think it's a fair shot at either maintaining your job or looking for opportunities elsewhere. Right.
Kila mtu atajipanga. Now, KCB has assets worth 714 billion, while NBK has assets worth 109 billion. Now, when it comes to the merging, what would you say the investor will be looking at? What should the investor look out for?
Well, now that you've got a combined potential combination of 800 billion plus 800 billion plus in assets, and of course we know from the financials NBK was underperforming. KCB probably one of the best performing banks in the country. If you look at it from a return on assets, especially return on opening assets, that's what I like to look at, and returning on opening equity. I think there is quite a bit over there, and therefore the shareholders of the combined entity should be expecting a good jump in profitability. Maybe not immediately, but certainly over 2 years we expect good showing. Good
showing for shareholders coming from both the divides. Now let's look into the circular that KBC had to its shareholders. Could you kindly unpack it for us?
So it was a bit wordy. I don't know which part.
Just break it down for us, for the purpose of those investors that are out there.
With regards to what the share swap, share swap part, so I believe I forget the ratios, but it was set on ratios, right? And there's a good reason for that. Prices move regularly, and they can move also in different directions. So you have to build a basis of merging in terms of pricing at a certain point, and that is acceptable to both parties, and that's why ratios worked. I think the ratio is about 1 to 10. Yeah. So if you have 10 NBK shares, you should be able to get one
share from KCB.
Yeah. I know there was a disconnect with regards to that sort of pricing, because the calculation of most investors had not taken into account some preference shares that were in the bank, and actually, if anybody was following the National Bank story, were subject to a lot of discussion between the two biggest shareholders, which is NSSF and Government of Kenya. Now, just so you know, after conversion, immediately after conversion of the preference shares to ordinary shares, Government of Kenya will be the biggest shareholder of NBK, and they'll dwarf NSF shareholding. So it was important that this transaction be packaged as one, so that everything happens simultaneously. Otherwise, NSSF was always reluctant to have the preference shares converted to ordinary shares first, and then give the government the opportunity to dictate terms. So because of that, they had to come together. There had to be an offer first, and the offer then states that the preference shares ought to be converted first, so it's just one transaction, right? So if one doesn't happen, the other doesn't happen, so that everybody retains their position. So that was the interesting dynamic behind this one. So on conversion, current ordinary shareholders will be diluted, and that's why the 4 shares to 10 shares of NBK to one share of KCB made sense.
All right. Well, unless you have anything you'd like to add about this merger system that is clearly growing in Kenya. I'd like us to shut this interview down. Thank you so much for finding time. Any last words?
No.
You're good?
Yeah, I'm good.
You're in some sort of Friday mood. Yeah? I wish the viewers could actually see how you're dressed. You're ready for the weekend. But thank you so much for coming, Johnson.
It's a pleasure.
My name is Nina Shaban. That's it for Markets Today this evening. Don't go anywhere. Tonight at exactly 7 p.m. we have a bigger surprise for you. We won't be reading news from right here in our studio. We're going out, so you just follow our tracks. Keep it Metropole TV, follow our tracks, and I'll be presenting news to you from the outside at exactly 7 p.m. Enjoy the rest of your evening.